Riot Platforms taps $100 million Bitcoin-backed credit from Coinbase to turbocharge expansion. Riot Platforms, a prominent player in the Bitcoin mining sector, has announced the securing of a substantial $100 million credit facility from Coinbase Credit Incorporated, a financing subsidiary of the major cryptocurrency exchange Coinbase Global. This strategic financial maneuver marks Riot's inaugural foray into Bitcoin-backed credit, providing the company with a significant capital infusion intended to turbocharge its expansion initiatives and support overarching corporate requirements without resorting to the issuance of new equity. The facility, structured as a multiple drawdown term loan, underscores a growing trend within the digital asset space where companies are increasingly leveraging their cryptocurrency holdings as collateral for financing. Riot CEO Jason Les highlighted the non-dilutive nature of the funding as a key advantage, stating that it offers an attractive cost of financing and represents a crucial element of the company's strategy to diversify its funding sources. This approach is designed to bolster both operational capabilities and strategic growth prospects, with a clear focus on generating long-term value for stockholders by avoiding the potential dilution associated with issuing additional shares. The terms of the agreement stipulate that the $100 million will be made available to Riot in tranches over a 2-month period commencing from the effective date of the agreement. This structured availability provides Riot with flexibility in managing its capital deployment according to its needs and project timelines. The funds are earmarked specifically for key strategic initiatives, which in the context of a Bitcoin mining company, typically include expanding mining capacity through the acquisition and deployment of new mining hardware, investing in energy infrastructure to secure reliable and cost-effective power sources, and potentially developing or acquiring new data center sites. Beyond these specific strategic projects, the facility will also cater to general corporate needs, which can encompass working capital requirements, operational expenses, debt servicing, and other essential business expenditures. The financial terms of the credit facility include an interest rate that is dynamically linked to broader economic indicators. Specifically, borrowed amounts will accrue interest at an annual rate calculated as the greater of the prevailing federal funds rate, upper limit, or a base rate of 3.25%, plus an additional margin of 4.5%. This structure ties Riot's borrowing cost to the current monetary policy environment, reflecting standard practices in institutional lending while incorporating a fixed minimum floor rate. The initial maturity date for the facility is set for 364 days from the effective date, providing Riot with short to medium-term liquidity. However, the agreement includes a provision allowing Riot to request an extension of the maturity date for an additional 364 days, subject to the approval of Coinbase Credit. This potential for extension offers Riot added flexibility in managing its debt obligations and aligning repayment schedules with its long-term strategic planning. A cornerstone of this financing arrangement is the requirement for Riot to secure the loan using a portion of its existing Bitcoin holdings as collateral. This move exemplifies the increasing acceptance and utility of digital assets within traditional financial frameworks, allowing companies with significant cryptocurrency reserves to unlock liquidity without selling their assets. For Riot, this means it can continue to hold onto its Bitcoin, potentially benefiting from future price appreciation, while simultaneously accessing capital for immediate needs. The use of Bitcoin as collateral introduces specific considerations, including volatility risk, which lenders typically mitigate through mechanisms like collateralization ratios and potential margin call requirements. Although the specific details of these protective measures were not fully disclosed in the announcement, this financing strategy is particularly relevant in the capital-intensive Bitcoin mining industry, where significant upfront investment is required for hardware, infrastructure, and energy. By securing this facility, Riot enhances its financial resilience and its capacity to navigate a competitive landscape marked by factors such as rising network difficulty, fluctuating Bitcoin prices, and increasing energy costs. The ability to access non-dilutive capital through a secured credit facility provides a strong alternative to traditional equity financing, which would dilute the ownership stake of existing shareholders. Furthermore, the announcement comes at a time when many Bitcoin miners are exploring avenues for revenue diversification to complement their core mining operations. In line with this trend, Riot Platforms previously indicated in February that it was actively exploring opportunities within the artificial intelligence (AI) and high-performance computing (HPC) sectors. This exploration is driven in part by the cyclical nature of Bitcoin mining profitability and the potential to repurpose existing or planned data center infrastructure for high-demand computing tasks beyond cryptocurrency mining, especially as Bitcoin network transaction fees experienced a notable dip. On February 13th, Riot Platforms publicly announced its pursuit of potential partnerships within the AI and HPC domains, signaling a strategic intent to leverage its infrastructure and energy resources to tap into new markets. The capital secured through the Coinbase Credit facility could potentially support these diversification efforts, providing the necessary funds for infrastructure modifications, equipment procurement, or strategic investments required to enter the AI and HPC markets. This dual focus on expanding core mining operations and exploring new computing-intensive revenue streams positions Riot to potentially enhance its long-term profitability and stability by reducing its sole reliance on Bitcoin mining revenue. The $100 million credit facility from Coinbase Credit is therefore a pivotal development for Riot Platforms, providing the financial muscle necessary to pursue its strategic objectives, whether in expanding its already significant Bitcoin mining footprint or venturing into the promising fields of AI and HPC, all while maintaining its existing shareholder structure through non-dilutive financing backed by its digital asset reserves. This financial flexibility is anticipated to be a key factor in Riot's ability to compete effectively and grow in the dynamic and evolving digital asset and high-performance computing landscapes.